All good? What a panel. Power panel.
Of course not.
Okay, welcome back, everybody. I know there's a few people outside. Hopefully they can hear me. Right, I'm going to start. We've come to our fifth session today, which is actually a very, very important one, because in our storyboard over the last couple of days, we've gone from the concept, what's happening globally, what's happening from a regulatory perspective, and we're now moving into really talking about the detail and the impact. And we had session one, which looked at the use of technology. And really, when I was putting the agenda together, we wanted to bring it all together at the end in one of the most important sessions, which is obviously around the data and analytics and how that's being impacted by the change in technology. So I'm really great to have another power panel here in front of us. A big panel, but I think as the first session proved, it can provide an awful lot of knowledge and ideas. So please pay attention, and please do also ask them some questions at the end, because you won't very much get this sort of panel together very often. So I'm grateful to all of you. I'm very grateful to Frederick as a fellow board member of BIIA, and obviously as the COO of Cedar Rose to lead it. So over to you, Frederick.
Perfect. Thanks a lot, Neil. Good morning, everyone. Thanks a lot for staying with us. I know that it's actually a long conference so far, but we'll make it to the end. And like Neil mentioned, actually, we have a good panel with a lot of experts coming from different experience and backgrounds, so it's going to be very interesting. And thanks a lot also BIIA for providing me the opportunity to moderate this panel on data and analytics in the world of digital commerce. But before we start actually in the cross-panel engagement discussion, let me start with a short story that I would like actually to share with you today. And that's going to be actually make the link with the last session as well. So some of you actually may know I have lived in Dubai for the last 8 years with my family there. It's been good so far. And coming from Belgium originally, I don't see my family all the time. So what we have actually with a lot of different expatriates as well is that they come and visit me on a regular basis, yearly basis in Dubai. The idea is really to...
yes, it is, at lunchtime.
Okay, Neil, so we can still hear you. If you want actually to share my story with me. So yeah, they come and visit me. And this story actually happened a couple of years ago, basically. So they were actually coming as they used to, same itinerary, same excitement, at least to see my family, maybe not their only son. Same also actually joy of overpacking any kind of food and drinks that we cannot actually get in Dubai, so they would bring them actually from Belgium in this scenario, and everything was actually going perfectly. And then in a few days during their stay there, my wife and I were actually at work on that day. They were willing to prepare some dinner for us. We were actually lacking a few foods, so they decided just to buy a few things online. It was bread, vegetables, fruits, olive oil, nothing very fancy. So I told my father, actually, it's easier if you just connect online on one of these applications. Everything can be delivered in Dubai, so it's way more easier. And then actually you can actually make your purchase over there. So we started grocery shopping, go to the cart, go for the payment with this card, declined. Okay, surprisingly, it's only food. Try again. Declined. Okay, so it just decided actually not to continue on this failing process, and they just actually got on to the grocery shop actually in the area where we live. They got everything, they paid in cash eventually, they came back home, and then we had this discussion in the evening to understand, okay, what happened? Like, I don't understand, it was a simple purchase. It's not like an oligarch from Russia buying real estate with Bitcoin, right? So we actually just discovered after that the fraud system in Belgium, from the bank in Belgium, just flagged this transaction just to be a suspectful foreign activity. And then they blocked the card. Simple. And that's where we realized that it was actually very surprising at the same time, because it was a well-documented travel pattern that my parents actually got for many years, coming to Dubai at around the same time. But still, they decided actually to block the card. And there was no fraud. It was just bad data. It was a shallow context. It was zero personalization. And that's how actually I want to link it to the previous conversation, to say that it's still a reality today that it's happening. It's not only for tourists, it's for SMEs, it's for young consumers, it's happening for merchants as well. They want actually to build a digital presence. They really want actually to get access to finance online as well, but they cannot. They are simply rejected. They're rejected not because they are risky. I mean, some of them are risky and you need to reject them. But in this case, actually, they are also rejected because the system does not know them well enough to trust them. And that's actually what's happening. And that's what I hope today, that these panelists today will bring their expertise to resolve this issue, to get richer data, smarter analytics, more inclusive technologies, as well actually to address this situation. And maybe only my parents in the future will be able actually to buy olive oil at peace while in Dubai as well. So let's start. Okay, so quickly, the agenda for today is going to be very simple. 30 seconds intro by each of the different panelists, because I want you to get to know them better if you have not met with them earlier during the conference, so you know who you are actually speaking to or engaging with. Then we'll go into the cross-panel discussion together, and hopefully we'll have some time for a Q&A discussion at the end as well. So please, Monica, if you want to start.
Thanks, Fred. And so my name's Monica Lacey. I'm the Chief Operating Officer at Centrix. And I just wanted to start by saying it's been a pleasure to be here. So thank you, Malaysia, for your hospitality, but also to BIIA. It's been good. So Centrix, we're a private credit bureau in New Zealand, and we focus both on consumer credit reporting services and business credit reporting services. So that just gives you a bit of a holistic overview.
Hello, 안녕하세요. My name is Seongjun Chun, and all my forwarding friends call me Jun, because my last name is Chun, but the first name is Hongjun, so do not confuse next time. You can call me Jun. So I'm Jun from Korea Credit Bureau. Korea Credit Bureau is a leading credit bureau in Korea, headquartered in Seoul. We set up in 2005, and actually this year, this is 20 years anniversary, and for last 20 years, I serving for the credit bureau. Actually, I didn't expect I working for so long for my company. I start my career as a model developer. So from the beginning, I joined in the scoring model for the bureau score version 1, and actually, for your information, we have more than 100 products and services, and then maybe I join in the more than 20 scoring product as the model developer, and then now I'm in charge of the global business as a director and then overseas, and then some of you already know me, and then I'm happy to hear joining this meaningful event. Thank you.
Thanks. Good morning, everyone. I'm Fiko Dong. I'm the founder of Asia Verify. We're based in Singapore. Look at our name. We focus in Asia. So the purpose of the business is we want to get Asia. It's much more easier for the world. So basically, we are offering live access, real-time company verification to most of countries in Asia, as well as UBO, a very interesting one. Yeah, in the last few years, this is the only things we are doing, and we are trying better for our customer. Thank you.
Yeah, so my name is Anit Anthony, and I am the Chief Product Officer for Advanced AI. We manage 2 credit bureaus, one in the Philippines, CBP, and the bureau in Indonesia, which is CBI. And apart from that, we also have other products for KYB. We partner with some of our panel members here, FICL as well as KCB. Yeah, and obviously that's we're looking to get into more markets, especially in Asia, Southeast Asia, and some of the overseas countries like Latin America as well. That's about myself.
Good morning, all. I'm Karthik, co-founder, CEO of Optisol Business. We focus on helping customers embrace technology through a combination of managed service and solutions. Specific to this industry, BIIA's industry, we have an agentic framework which primarily focuses on automation use case, automation and last mile automation use cases that goes around the typical complex data workflows that you guys have, right? And why we are here, BIIA, this is our first ever participation. We are relatively new to this industry. We started working with this industry from early last year, right? While one of the objective could be in terms of just to create an awareness of the value proposition that we offer, we are equally, as a product team, we are equally interested in coming here, listening to some of the conversation here firsthand with regards to the complex nature of this industry, and as well the kind of opportunities that are available, because we truly believe we are going to have a lot of takeaways when we go back here, which can kind of fit back into the core product strategies that we have. So looking forward to the conversation here. Thank you.
Good morning, everyone. I am Giacomo degli Innocenti. You can also call me Jack. As June, I have quite a complicated name. I'm from CRIF, which, for the one that don't know, the company is a credit data company that has in the region 3 credit bureaus: Vietnam, Philippines, Indonesia, and India, of course. So it's 4 actually. We also have one of the largest database for a company, so we're quite strong also in the business information segment. In my role, I'm the head of strategy, so I do a bit of everything. I'm following the strategic planning, but I also follow the product development for some strategic products. So I'm quite lucky. I'm following very exciting project across the region. Thank you.
Perfect. Thank you a lot, Giacomo. So I'll start with the first section of this panel. We're going to actually look at the foundation of data in digital commerce, and specifically how they are shaping the digital economy. Monica, the first question is for you. What enabled New Zealand to regulate BNPL under credit reporting rules?
Yeah, it's been a journey, to be honest. Buy Now, Pay Later in New Zealand has been quite a controversial product. So, it's a perfect example of emerging fintech disrupting the market. The traditional lenders are really put out by the product because the consumers love it. It provides a really Uber-like experience where you can easily purchase goods online. It's a very frictionless experience, and the traditional lending market just isn't the same yet. So there was a bit of controversy in that area. And then there's also a perception with Buy Now, Pay Later from the budget advisors and financial mentors that support vulnerable consumers or consumers that are struggling financially. And the perception was that it was predatory lending and that it was actually making it more difficult for these people to get out of debt. So there was a lot of noise in the media and in the industry forums from the banks and the big lending companies, which caught the attention of the regulators. New Zealand is actually the first jurisdiction to regulate credit reporting for Buy Now, Pay Later. And the way that that really came about was because there was all of this controversy going on But in the end, what happened was the buy now, pay later businesses worked really closely with the regulators. So it was a great example of collaboration between regulators and emerging industries. And they landed on a solution where in New Zealand, we actually, a buy now, pay later provider must participate in positive credit reporting, and they must do a credit check on an individual when they first open the account, or if there is any limit increase applied. So I think that where it landed was quite a nice solution. I think the regulators really considered the frictionless experience that buy now, pay later offers without putting in too much burden on that process, because if they had have introduced bank statement scraping, for example, it would have just made it very difficult for them to operate in a digital way that they do. So I think it ended up being a really positive experience.
Okay, perfect, interesting. Anit, just actually maybe to react on that one. So how would you actually compare what Monica just shared related to New Zealand to the rest of Asia, if we take it as a bigger spectrum on point of sales financing maybe?
So I think most of you guys might know that we also have a BNPL business. It's called Atomi, and it's prevalent in Indonesia as well as in the Philippines. They've just started to contribute data to some of the bureaus. That wasn't the case. I think the thinking at that time was that because it's a very short-term loan and very small amounts, it's not really adding a lot of impact on the credit scores. And at that time, I think there wasn't a lot of contribution. But now, I think a lot of them have started to contribute right from Affirm to contribute to Experian. And then I think in Asia, it's been happening for quite a while now. I think for some of the, for the merchant, actually, they can do a lot more with this. But to me, I think the benefit is more on the consumer side, because most of the people that go into in this BNPL are people at the age of like sometimes even lower than 18. There's no regulation here, so for anybody to actually take a loan on a BNPL. So it's 18 to 25, 30 at the most. And then these people are just sort of getting into the credit market. And so they sort of become banked, especially in countries like Indonesia and in the Philippines, where the unbanked population is very high. So I think this is kind of going to contribute to the financial inclusion that these markets are actually struggling with. And then you start to have a lot of bank population as we go along. So we're seeing that already. The volumes that we're seeing at Atomi and some of the other BNPL players in the market are huge. And a lot of them are repeat customers. So they're actually building credit profiles by borrowing again and again. But they may be very small, but I think over time they would be ready. By the time they enter the job markets, they would start to be eligible for things like a credit card or loans and whatever else they may want to borrow. So yeah. That's maybe.
Thank you, Anit. Jun.
Yes.
I was very interesting to hear about the AI credit model actually, and credit scoring model that you've actually prepared at in Korea. I'd like actually to understand what legal reforms actually enable these AI scoring models to support your digital economy.
Yeah, so first of all, let me just define what is our society, I mean the credit bureau business. Credit bureau collect the financial data, usually the credit data from the financial institution. And after processing, we send it back to the credit evaluation purpose. But for last 10 years, we encountered the new trend. Everybody know the big data and data big bang. Because after the digital transfer, almost all the companies started to accumulate their data in a digital way. And then in certain time, there's kind of the certain recognition. They can make use this data as a different purpose and then make some money. So for example, let me describe like this. So, you know, first of all, telco data is coming to make use of the telco data, and then following the payment data is coming, and also public data is coming, utility data is coming, rental data coming. So we are so busy because every month we encounter new data player because they have our data and they want to sell the data. But what is the problem is that every time we try to build up the new alternative score by using AI technology, there is a very big barrier because anyway, we need to have a proper legal background to have a commercial business. In the technological experimental phase, we can try to build up the advanced AI model by using the alternative score. But when we want to sell this alternative AI score to the market, we should be very clear in the legal, there is no problem. But to do that, we don't have any legal background to do that. So luckily, in Korean congressmen have an agreement and then consensus to change the 3 related laws. So we say 3 related data economy law. First one is definitely about the credit information law. And second one, because all the data is IT-wise, so ICT-related law is changed accordingly. And finally, personal information protection law also somewhat changed accordingly to have a consensus to support this data economy and AI scoring by using alternative data. So since 2020, these 3 laws already changed. The commercial bureau or credit bureau or data provider have a firm background to have a business by combining the new data and then try to build an AI scoring model by using new technology. So that is the situation in Korea. Thank you.
Okay. Anit, I'll come back to you on that one. So we have been speaking a bit about consumer lending and the scoring system actually adapted to them. Do you think that SME scoring could be harder than consumer B2B compared to B2C? And if so, why would you say it's the case?
Yeah, so SME is obviously much harder for lending, and there's no one size that fits all. The SME market is small, medium, and micro actually, and for these, it's actually first of all, I think because there's no specific scorecards that you would use for consumer lending can be really fast with the tools and the data that are available. But when it comes to SME, obviously there's a lack of data. The processes are manual. The regulations change, just like we talked about in the earlier sessions. The credit worthiness of these SMEs don't stay the same throughout the term of the loan. It can change very fast based on tariffs, regulations, those kind of things. So it's a lot harder, and it's more expensive. It's manual. It requires analyzing balance sheets, cash flow statements, all of that stuff, and you need really experts to kind of process or assess these businesses, which is very, very hard, and not to mention the changing industry trends. So obviously that's one, and then of course the data, right? So if it's MSME, then most of the time, and if it's with recourse, then you can still refer back to the consumer credit of the owners and the UBOs. So we have products like that, which is why we work with Asia Verify as well to unearth who those UBOs are, and then we kind of look at the consumer side of things. So that's one way we do it. But at the same time, we also have information sharing that goes across different businesses, because it's actually the whole supply chain that you need to analyze, not just on that one SME, but you need to see who they trade with and all of that. So it's obviously a lot harder. AI can't do it as of now, but of course it can kind of shorten the process for a little bit, as much as I can say for now. Yeah.
Monica, just a quick follow-up on that one. You are the expert for BNPL in New Zealand here. Do you think that regulations on BNPL in New Zealand could actually be adapted to what's happening for SMEs, for example? given the difficulties that was actually just shared by Annette?
That's a really good question because SME is a complex space, as we've discussed over the last couple of days. You know, in the bank environment, they're a little bit in no man's land because they're not quite a person and they don't fit in personal banking. They're not quite a corporates that don't fit in that space. And the banks are really grappling with how to deal with these SMEs because there's a huge market out there. There's thousands, and in our case, thousands of businesses out there that fit into that section. I'm not sure that buy now, pay later is quite the right fit because there is some complexity, but we are starting to see the emergence of some lenders where for lending, for example, of $50,000 or less, it's a much slicker process. It looks automated from the front end, but there's people in the back doing the work. But it's a much faster lending process than a bank, you know, would take to actually approve or decline the loan. And it seems to be working quite well, but it is a higher risk product, so you pay the increased interest rate. So I think as fintech comes around and we get a better understanding of how we can work with these businesses, things will change and continue to morph. At the moment, it's still a bit of a tricky area. I don't know if anyone else has got a view on that.
Doesn't seem so. So, June, actually, just coming back, actually, you raised actually a few points related to some alternative data sources that you are using at the Korea Credit Bureau. You mentioned telco, mobility, cultural as well, and the like. So, which one do you believe are the most impactful in what you do? And I know that actually you raised actually in preparation of this meeting the My Data initiative that you have actually. So if you can have a few words on that one as well.
Yes, thank you. You know, let me just describe the ordinary life of Korea in Seoul. I don't know, some of you already have been Seoul. So my name is Jun. Jun just wake up in the morning, and then he tried to go to his office and then found that, you know, he's somewhat late, and then on the driving, he tried to break the traffic condition and try to drive fast. But usually in Korea, instead of the Google map, in Korea we have a Korean navigation application to find the way. And by capturing this kind of navigation information, this June's driving pattern will be reflected to the mobility score. And then this mobility score already sold to the market to the risk pricing for the insurance, also the credit scoring purpose together. He goes to the Starbucks and then get a coffee. And every time I have a transaction, either a credit card or a debit card, detailed item of the transaction, it will be reflected to the transaction score and then reflected to their score, and also in the merchant side, how many transactions they have, what kind of the pattern they have, is there any seasonality? Those kind of merchant pulse data also will be used in the SME world. And I go to the somewhere, I found that, oh, today is my wedding anniversary. So I need to go to the Korean Amazon and then get a ticket for the orchestra. Great, right? And then this kind of the cultural purchase pattern, either, let's say, orchestra buying ticket or the baseball buying ticket, book purchase pattern, CD purchase pattern. This information already captured in KCB, and then we produce this as a cultural information score. If I go to the public information, also this information will be captured. So somewhat good, somewhat scary. So this means that as a bureau, from the traditional credit world, we are trying to moving on to the next level of the whole cycles data for the either SME or MSME or consumer itself. But our point is that we are still trying to go more because, you know, as I shared, we changed the law, the three-related law. One of the initiatives for government is the My Data License business. So our regulator gives some special license for the My Data business. And if we also, KCB has that business, and then we construct some application web. So I go to the My Data application constructed by KCB, and then if I consent for my data will be transferred somewhere like KCB, then my deposit information, my insurance information, my security information, my telco information, my national pension information, so all the public and private sector available information can be sent somewhere I want. This My Data initiative is based on the GDPR's data portability, because anyway, the ultimate owner of the data is a consumer or a business entity. If they want it, they can ask transfer my data somewhere for their beneficial purpose. So to reflect this kind of data portability concept, our government reflected this concept in the law, and then introducing new data licensing, say my data, then we are not easily, but anyway, we have access to the new data world, which is the beneficial way to business entity or consumer. But not only KCB and not only Korea, but also other regions like BOT, as far as I know, they already released the Your Data initiative. You guess, right? The same way, but the wording is somewhat different. And also in other regions like Indonesia and other Asia Pacific region, they try to moving on to absorb more alternative data to the financial world. So destination is same, but the origin input is the different. So still, we don't know what is the next, because I think due to the change of law, we have a more landscape to expand. But even from KCB internal, we don't expect next year what is coming in terms of product development and the legal perspective. So that's the current snapshot of Korea. And then hopefully, maybe next time we can share something else. Thank you. Yeah.
Looking forward to the updates on that one. Okay, let's move to the next section of this panel, specifically on the technology enablers and specifically maybe the innovation on AI on that one, and to dive into the tools behind the scene. Giacomo, first question for you. So we spoke a lot about Gen AI yesterday during different panels and discussions. How do you think that Gen AI can improve access to complex business data?
Thank you, Frederick. I think that, there is this widespread belief that Gen AI will simplify and make it easier to access complex data, among which business data. But I think that is not entirely true, and sometimes it's even the opposite, because yes, generative AI gives us very fluent, very polished, and very plausible answers, but they could be right even if they're totally wrong, which in an environment where we are taking critical decision through the business information that our clients are handling, and I'm referring like underwriting decision through financial statement and business information report, M&A activities through the litigation history, cross-check of cross-border transaction with compliance data. AI cannot be the answer because the data is not given that it's accurate. And accuracy is not just a critical element. I think that there is a problem of false confidence, because those models are designed to fill the gaps, to give you an answer at any cost, even if the data is not there. So you have the confidence that the data is good, even if it's not. And I have actually a personal experience that happened a couple of months ago while I was putting together the strategic planning that in CRIF we do every 3 years to set the direction, right? And one of the basic things you do is to collect some macro data to understand where the market is growing, how fast the GDP, the population growth, the consumer credit, and so on. And I thought that's the perfect task for AI. I will save a lot of time and they will do the job for me. And so I did my prompt. I received a perfect polished answer that I didn't even question it because the answer was so good, giving me references, giving me the name of the institution that produced that number, with the number of the page and the URL, that I didn't even question the number. After a few days, I reviewed the work with my boss, and he wanted to see a specific number. He wanted to deep dive. I don't remember what was the issue, but I said, no problem, I have the URL. Let's go and check it together. And then I realized that the URL didn't go anywhere. It was an invented website. So I realized that the number that I was relying on to set up the strategic planning were all faked and fabricated by the AI. So imagine how dumb, first of all, I looked dumb at my boss eyes. I would have looked dumb at the CRIF board, and I would have set a plan, multi-million euro plan based on fabricated data. So imagine the damages that AI, if it's not based on trusted data, can do. So what we believe, back to your question, is that Gen AI is not going to simplify, but it's going to raise the bar of data quality and trust. What we need is to pair Gen AI together with data governance, which means integrating data that are verified and trusted, and define also the rules of what AI can and cannot say. So a strong embedded kind of governance into the algorithm. Just to conclude, I think that generative AI is not going to simplify, it's going to amplify either the risks, because we see that the risk of misinformation is huge, but also the insights. I'm not saying that AI is powerful. We have seen many examples during the previous panels. So yeah, it's going to be an amplifier of both the insights and the risk. And honestly, this is a great news for every data providers, because we are going to be the center again to make the AI trusted once again.
Thanks a lot. Kartik, just to react on what Giacomo just actually mentioned, you are the tech expert here in this panel. So what's your view on the readiness of Gen AI deployments for these specific use cases?
Yeah, see, from a technology point of view, the readiness is there, right? But then he's right, he's right in saying, how Gen AI could kind of hallucinate the data, right? So this is a typical issue that might probably happen with, this black box approach of, how you leverage on technology, right? In fact, even within our product team, we always debate about, whether Gen AI is going to be our Einstein or is it going to be our assistant, right? So, but then, we definitely cannot undermine the power of, human capital in the decision-making process. But from a deployment readiness, yes, there are challenges, because there are challenges in terms of, the kind of data that it will rely on, right? Because, we are not talking about the traditional data sources, right? Because, if you have to really leverage the power of Gen AI, you have to kind of, leverage the, alternative data sources, which can come from, multiple formats, multiple sources. But then if you really look at, if you have already got the infrastructure, that can handle this, there's a catch-up that we'll have to do, right? But then, that is where technology enablers will come in, right? So that is where this agentic model will come in, because, that kind of takes care of, how it has to go about, discovering the data, detecting the data, fetching it, and how to, kind of create that real-time data AI, AI required, data processing on demand, right? So the technology is there, but there is a catch-up that will happen. But while there are challenges with the infrastructure, from a readiness point of view, it is there, because there is a lot of investment happening from all the leading platforms in terms of how they are going about creating this infrastructure, right?
Okay, perfect. And continuing with you, so we've discussed actually AI and the likes, but also looking at automation. So you are also actually working a lot on automation with different clients coming from different industries. How do you think that automation can modernize risk data systems today?
Yeah, that's a very good question. In fact, automation, if you take the case of automation has been happening for a while. In fact, if you look at the last decade, right, there are a lot of investment that has gone in towards digital systems, right? Even though we started working in this industry for the last 1 year or 1+ years, most of the credit rating agencies that we have spoken with, they have got their backend systems, they have got their customer-facing portals. There is already a bit of process automation that is happening. But the challenge here is, if you really look at the nature of risk profiling these days, right? This is no more going to be a binary state of being verified and unverified. Rather, it's going to be always a continuous stream of inputs, right? Let me take one of the clues that we saw from the Forrester report that was presented yesterday, where they said one of the priority IT investment bucket is going to be in terms of detecting the customer vulnerabilities, right? How are we going to detect customer vulnerabilities? They are not going to come forward and say that this is what this is where they are kind of seeing their vulnerability, right? There has to be a mechanism in which these kind of signals could be automatically detected and proactively detected, right? And the only way that's going to be possible is by leveraging on this alternative data sources, right? So though automation is already in place, there is going to be a new wave of automation that's going to happen, which is going to be predominantly this AI driven, right? And we just need to keep creating that adequate infrastructure, create pipelines that can handle these kind of data streams. Because the real-time analogy that I can make with regards to the existing pipeline is if you look at the pipeline that we have got in terms of processing the volume of data that is happening today, these are designed for traditional data systems, right? This is like the capacity of this pipeline is, if I have to take some real-time analogy, it's designed to handle, let's say, the drinking water supply, right? But then for the kind of continuous stream of inputs that we are talking about, the floodgate is going to be open now, right? So how do we handle this, right? So that's going to be the challenge.
Okay, perfect. Fikol, you also evolve in the world of fragmented data yourself. So one actually a quick follow-up on that one. What do you think prevent or hold our industry actually from using or actually integrating this solution today?
Yeah, thank you. Just come a little bit different angle to the data. Just data analytics. I definitely from the data part, right? So we will talk about a lot of digital commerce. We talk about buy now, pay later. We are working together, so we are a data provider. So come to this part, we're talking about especially SMEs, small business. For the bigger companies, I think there's a relatively enough solution in the market, the better solution for that. But for this SME, it's really underserved market. And especially during COVID, post-COVID, you will see the digital commerce, digital payments is booming. We talk about TikTok Shop, we talk about Amazon, we talk about a lot of online shops. So there's like a buy now, pay later, all the digital payment methods come all the way to the market. But how you serve to this market, this is a big question mark. They come back to the question about very fragmented information. We are not talking about one country. We talk about 10, 20 countries in Asia. And we are looking for a standardized process, and the single API can be connected by any autonomy. Very quick, they can build beautiful dashboards and charts from the behind, and leave the really dirty and hard work to the data provider from the end, right? So it's definitely we are talking about how we do that. AI. I don't want to go to the technology part. Of course, there's so many technology we can use at the moment, But fundamentally, from what we learned from the market, when it comes to if you really want to get real good data, you have to go to the local government, you have to negotiate with them, and you have to get the data directly from them. But in Asia Pacific, we share very different languages. We are sharing very different cultures. There are so many barriers come in the way if to slow you down to can get a system like that. So what we are doing here today, we definitely using AI, quite a lot of technology, but I agree, it is not the critical part. How your domain knowledge, how you manage all the partners from each jurisdiction, and what's your understanding on each data fields can become together, can be structured together, and become to the unified API to the customer. So that is the key. Yeah. So I'm not saying there's no better way, but it is not that relevant at the moment. If you really want to get a really good quality data.
Okay. And continuing on the subject, you mentioned actually the regional aspect, and you have cross-border platforms actually in digital commerce. So what do you believe are the most impactful or riskier onboarding risks for this platform actually?
Oh, actually, it's quite a lot. Just take the example in Singapore, back to the COVID. The Singaporean government, probably just like so many governments out there, are trying to support small business to survive to the COVID. So the government gave your grant. Small business, you can apply the grant from the government. There's a lot of fraud, even coming from the government grant. This is a trading support from the Singapore government. Company A, I want to deal with the business company B. I want to purchase something from Anit, and the government will support me to doing that. But after a few months, after a year, the government running the grants, the government found out, oh, we got scammed. And all the UBOs, ultimate beneficial owner between the company A and the company B is in the foreign country, actually the same person. Right? It's just like someone just sitting in another country, set up two companies trying to trading each other in Singapore and asking for government support. So there's definitely a risk. Yeah? We don't even go to the very common risk where everybody know the shell company at the moment, how you move the money laundering. That is we are trying to fighting every day. But it's new kind of a risk based on what is actually happening today in the world. It's coming up as well. So the solution still, no matter it's KYB, UBO, whatever is that, so you have to find the better way to use the best quality data and then link all the country together. And you will find more truth behind of that.
I mean, you've mentioned several times that you partner with FICL on this one. So looking at these onboarding platforms and cross-border actually whenever it's possible, do you think that real-time KYB could actually increase trust actually and remove some of these risks that FICL just mentioned?
Yeah, so the FICL's service is just one of the services that we have. We have like a bunch of them, and the challenge there is to sort of make it like it's the same person, right? So we have data sources, and it depends on jurisdiction. So sometimes, like in the Philippines, the data is very, very fragmented. Indonesia is actually the same. We have to rely on multiple data sources. His service is kind of like the backbone. But we also need to make sure that all the data coming from all these different data sources are of the same person or the same entity, and that itself is a challenge. Philippines is more specific because they have they don't have a unified ID. They have multiple IDs. So people have different IDs, different names. People have multiple IDs, the same type of IDs. And so when you have to actually do the KYB, it is really, really difficult. And hence we need to work with government agencies. They don't even have the data as an API. So actually we're helping them to to make that data more readily available, which is a combination of automation and human in the loop, if I may say, because those are asynchronous APIs that actually will do it. So yeah, in order to do real time, it's okay, but I think we still haven't been able to achieve real time in these two markets. Some of the more advanced markets, Singapore and Hong Kong, I think we can do real time. But I think for some of the Southeast Asian markets, I think it's 24 hours, right? So 48 hours and still have to wait for it, but that's still good enough, right? So yeah, but we still have a lot of takers for this kind of a service because, like you said, it's underserved. There's a huge demand, not just for credit, but it's also for payments and merchant onboarding, and those other use cases as well. So yeah, then we see a lot of growth.
Perfect, thanks. Giacomo, coming back to you, you raised actually some points related to the risk of using actually Gen AI actually in different lines of work. In addition to what you mentioned, is there any safeguard that you believe would be necessary for anyone to implement whenever AI is actually using trusted data sources?
Yes, thank you, Frederick. Yeah, that's exactly the point. Even if the AI is using trusted data, there is still the risk that AI goes beyond of what is known. So the trusted data itself, it's not enough. We need to implement additional controls on top of that. And that's what we experienced a few months ago when we started developing our AI agent that helps our customers to search and navigate our business information report, which, by the way, will be launched this month. During the early development, what we realized is that AI was going beyond and melting, blending, something that we didn't know. So what we thought is, okay, that we need an extra layer of control, which we call the CRIF guardrail system. And guardrail is a word that our panelist from Forrester mentioned before. So I think it's quite pertinent. Which actually makes sure that AI is not going beyond the binary. And just to make you a very simple example, what we experience is that during some tests, we ask we ask questions to the AI, of course, testing if the level of answers were good enough. And the more details you give to the AI, the more probable is that AI will give you fake responses. For example, we ask to a Singaporean company, is there any female owner of the company that is from the Netherlands? So the fact that you're giving some hints to the AI make the AI confident to give you some results that you would expect. So AI prefers to give you a fake answer rather than tell you, sorry, we don't have this information. And I have plenty of other examples that now I would not tell you, but with our CRIF guardrail system, we want to make sure that AI stay at the level of, sorry, I don't have this information. Of course, we don't want to limit AI. So if, for example, I'm asking, would you trust this company for onboarding and give them 90 days payment terms, then the AI have all the elements in the reports to answer these questions because they have the credit limit, the credit scoring, the financial statement, all the financial indicators that can help the AI to define an answer and give me a recommendation based on that. But no blending, no hallucination. That's what is important for us. So back to your questions is, do we believe in safeguard? Of course, it's fundamental. AI has to be grounded in verified data. That's the first requirement. But it has to be disciplined. It has to be confined in some very strict rules. Otherwise, AI applied to our field, it doesn't make a lot of sense.
Okay, perfect. Jun, just one question actually. Is there any framework in Korea actually related to transparency or accountability of the use of AI related to the data that you are maybe using as well yourself?
Yeah, it's a good question. Because, you know, in every conference, every time I join in, all the panel and the presenter talk about the AI and everything. So, but from the perspective of credit bureau, we encountered the new technology, the AI, and we found that one of the most benefit for the AI technology is that they guarantee the better performance of the predicate model. But there is a critical problem because the AI technology is black box algorithms usually. So meaning that there's an Anit want to get a loan from the business for their business from the bank and business purpose, and then they ask the KCB and then provide back some score, and then in the lending decision we should be very clear and transparent why Anit have a score 300 finally rejected, because that's the point that explainable AI is important. Because usually like there's some deep learning algorithm and then the AI algorithm, even if they guarantee the high performance, we know the input, meaning that characteristic and variable. We know the output, the final score, but we don't know what inside, why they have a certain score. That aspect is very critical when we implement AI technology to KCB itself. So actually, same pain point and same concern was debated for a long time in Korea. So that's the reason we have a AI algorithm use guideline, meaning that information provider or credit bureau, when they launch it, AI technology-based score to the top market, we need to pass through some kind of AI algorithm committee. And this AI technology is a proven technology. And also this model has a proper performance and robust. Finally, they should guarantee some explainability. So final criteria is pretty hard to overcome because random forest easily implement and then make some better score. But there is a limitation why there's certain score have those kind of result. So that's the reason for last 5 years we had a research project within the university lab and give some homework to the computer science. So we expect some the better performance AI technology, but in the same time we expect explainable not only in the variable level but also in the classing level together. So after several struggling years, we found the answer from the professor from the university. So now, in case of KCB, we apply the kind of explainable AI algorithm for our modeling methodology. In some companies, they try to adapt surrogate model approach, meaning that they use the AI technology in the black box, but behind them, they need to explain to regulator or consumer or lender. Then they make the mimic score model to explain them. But somehow, what is important is that in final criteria, explainable is not only for the regulator, but also the bureau score modeler is very important criteria. And then things, many approaches coming, and then I don't know what is the final answer in this industry, but that is the kind of the AI algorithm guideline is already implemented in Korea.
Okay, perfect. Let's move to the next section that will be specifically on alternative data. Fikol, this one is for you, the first one. How do you manage data quality with a fragmented ecosystem in Southeast Asia? I'd like to understand that.
It's difficult. Right. So if I know how complicated the KYB business is, I'm gonna rethink about startup HR Verify a couple of years ago. Actually, first of all, you really have to, I think, still back to the domain knowledge. You have to understand the country first. Before we talk about any data quality, it's going to be very difficult for you to judge data quality if you have no idea how many company tabs in a country and how many different kind of shareholder tabs in a country and how they group those to each other. So that all the information gonna link to how you're gonna analyze the data and all the way to the ultimate beneficial owner tracking. So few parts to get the knowledge in that country gonna be the first step. You'll have to spend the time on that. And the second step, you get connected, whether it's through the local government database or local partner. You're gonna run the tech stacks to run the completeness or to random check the different types of companies. So they're gonna be linked to the step one. If you do not have any idea about how many company types in the country, how you can do the thorough test for each company, type of company. And each type of company, they come back with different data structures. Some is more, some is less. What do you mean? The LLPs means in the private limited. And what do you mean? Probably in New Zealand, they have a group shareholder, right? A few individuals, they can share the group of the shares as a name in the company register. But it's not happening in other countries in Asia. So when they tracking to the UBO, how you define that, right? So that is all the things come to the data quality. I think the easiest part, it is to check, I got 100% data return, and there's a real-time updated. So that part is relatively easy. But what my point is, before you get to that part, there's several homework you have to do before you can judge the quality of the data.
Perfect. And if you could just actually discuss a bit about traditional data in this sense, actually, which is actually the key or the starting point. In your opinion, is there any important alternative data sources for SME risk profiling?
Yeah, so actually there are quite a few, and it's not. It depends on the jurisdiction. So we've looked at. We're actually looking to stitch together data that comes from different data sources, right? So that's also another challenge. But then also to find out which of the data is actually relevant. We have a data expansion team. That's because of the bureaus being what it is and the unbanked population. There's a number of unbanked as well. So and then also lack of data. So we've looked at utility, for example, and this is not just telco. It's also energy. And we found ways how to use that to study the health of an SME, for example. Of course, it's a combination of data and analytics, and that's something which we found to be quite significant. There are other data sources, which is, well, tax is another one that's hard to get, but again, the way we've been doing it is not just use one data source. We will combine two data sources just to kind of get the insight that we want. And then we make a product out of that. And then that's what we actually kind of sell to somebody who wants to lend to an SME. So it's a lot of data prep work that needs to be done. There's no like raw data from another source that comes. We sometimes have to combine data from various different sources. And sometimes this needs technology because all this has to happen in real time when the inquiry comes in. So yeah, we've looked at these two. We also look at e-commerce partners. They also have a good amount of data. Telcos, of course, but telcos are too greedy. They need a lot of money, and it's not really worth how much they charge. But yeah, so these are some of the ones that we found significant. There's also open source intelligence that has become more, with all the risks that they mentioned before as well. But that's another way to sort of build, right? Another source, it's related to what June actually said, is how we can collect data directly from the consumer, right? And well, a lot of these consumers can just be owners of MSMEs and SMEs. It's voluntary declaration of information. So it just could be, have an app, just like they have, and they can declare whatever information they want. It gets verified, and then it gets used if they have consent to use it. And that's another way we're trying to build up the database. And I think this is a more organic way to do it, but it's in the longer term, I think it will be more reliable in the absence of data. So it's all boiling down to credit education and letting them use the app, giving them some benefits and all of that, and then help us to collect more data. Yeah, so those are some of the sources.
Thank you. Yeah, Jun.
Yeah, you remind me very good, interesting project between the public sector and the private sector because, like you said, SME is a pretty hard area in terms of the data gathering and the scoring. The same as SME and MSME. So one of the recent projects in Korea, we had an approach from the public side, like statistical office. Because in Korea, there's a census data, especially for the enterprise data and SME. So they only use this is a public release purpose. But in the same time, they have interest and they can have some SME supporting purpose. So we had some NDA and then some agreement, and then public census enterprise data combined with the credit bureau data. We combine the SME data together in the statistical office, and then make some value add and then some research and scoring together. This will be used for the SME evaluation purpose. I think because the government and private sector, public sector, they have many data, and somehow they have a hesitation to open to the private sector. But if we have some good incentive to beneficial to the certain purpose, in this case, this is MSME and SME supporting, that we can have some more better chance to have a more new alternative data in the public sector. That was the case. Thank you.
I love use cases. So maybe Kartik, would you like actually to share something that you've been doing actually for one of several of your clients actually, so we can learn from this as well?
Yeah, you mean in terms of the use cases?
Yeah.
Yeah. Yeah, definitely. Probably I can talk about a couple of use cases. One is, how we are kind of, automating the process of, data that is, collecting the data that is required to create, this credit reporting profiles, right? Where, you typically rely on different data sources, right? You rely on data coming from the registries, then data coming from your alternative data sources, which could be the secondary medium, as well as any financial documents available, right? So internally, there are few use cases that we have solved, leveraging the agentic framework that we have got, right? So what we do is we kind of orchestrate some of the agents, because basically the agents are created for specific tasks, right? And but then from an end user point of view, the users doesn't need to bother about which agents are in play, right? Basically the use cases will drive what are the agents that needs to be orchestrated on demand, right? So what we do is we kind of mimic the user behavior, right? Typically, if you look at the process that typically happens, in terms of how you go about collecting the information, there is a lot of research that's being done in terms of going to the corporate registries, taking the data, right, and kind of ingesting whatever data that you need from whatever different documents that you might have, and doing the research on the secondary medium. We kind of automated this process. So initially, there is a corporate registry agent, which kind of do a typical user navigation. It kind of logs in. It brings in sense to kind of navigate around the CAPTCHA protections. But of course, it's not like a unauthorized scraping. Rather, we work along with the customers in terms of getting their account credentials. It's kind of a process. It's kind of adding an intelligence layer on top of this robotic process automation. That's the kind of model that we have built, right? So the agent knows how to navigate. It knows what are the information that are available on a freemium basis, and the information that is available against no payments. It can kind of pass through the payment gateways, make the payments, right? And then it kind of downloads all the available information. It doesn't stop there, right? It also kind of ingests the data and kind of arranges it on a chronological basis, right? And it also does the scoring. It's scoring in terms of validating the availability of data against, comparing it with, other sources available in, secondary sources, right? And, I mean, if you look at the information available in registries, some are, corporate, structure related, some are, financial related, right? So this is where, our financial data agent will come and it will kind of, extract the financial data, right? And kind of, puts together the summary report. I mean, again, when I talk about the summary report, we kind of create these reports in a predefined templates or the templates as per the needs of the customers, right? So this is one use case that we have done. And recently, we also started with another use case for an NBFC, that is non-banking financial corporation in India. It's in the POC stage, right? So I was talking about this financial data extraction agent, right? I mean, when we are talking about this BIIA space, it's about, the downstream process will converge in terms of, creating the corporate or credit profile. But then when you're coming to this, this typical banking or NBFC domain, right? That will translate into the typical, NPA monitoring, right? So, I mean, this is how, you have the fundamental foundation, but then the kind of use cases that you solve, it kind of varies based on the industry that, you are into. But then, I mean, but then the common point here is that, if you take both the use cases, we are not in the domain of, creating the, risk profiles or credit profiles. Rather, we go in as the enabler, who can kind of expedite the process of, data collection and what happens downstream with that, right? Those are two use cases that I could share.
Okay, perfect. Monica, I'd like to check, is there any such modernization processes happening as well in your region, in New Zealand, or even maybe with traditional credit bureau that you've seen yourself?
Yeah, I think, I just want to sort of segue slightly, but I think over the last few days we've talked a little bit about trust and how trust in today's world is harder to obtain and to keep. But as credit bureaus, we have that trust and we play a really important part in the financial ecosystem and we really have to maintain that. So the question for our businesses when we're regulated and we know regulation doesn't keep up with technology is how do we continue to innovate to add value to our existing traditional client base and morph this new emerging tech into that client base without compromising our integrity or, and importantly, sticking within those regulatory frameworks. So in New Zealand, we started working with Buy Now, Pay Later in 2017. That's 7 years before credit reporting was regulated. They could see the value in sharing that information with the wider financial sector. And also, importantly, I'm going to steal the other question. It's the young people, which in our economy are the underserved population. So we're really fortunate in New Zealand. We have coverage of 97% of the population. The people we don't see are typically people that turn 18 and are suddenly credit active or immigrants, so they're a bit harder to get visibility of. But if we can help young individuals to obtain safe credit and start building up a credit profile before they have to go and actually do more serious purchases like a mortgage, for example, then that's a really good position to take. So we worked with the Buy Now, Pay Later industry to try and make their product type fit within our existing framework, because traditional lending is based largely around banking, where it's monthly payment cycles. Our positive reporting framework, which is comprehensive credit reporting in some jurisdictions, is based on a monthly reporting cycle where we get told, Monica's got a credit card and this month she paid me on time. So we really wanted to be able to add the Buy Now, Pay Later data into that framework. So we worked around how we did that, and our traditional lending customers found that information very valuable because, of course, they also want to have visibility of the younger demographic and understand, are these people going to be good customers of ours? And they really want to capture that younger demographic because they want to hold on to them for life. So that was quite good. The other problem that we were trying to solve, which was really from a buy now, pay later perspective, was how can they help protect consumers from not getting into further harm by extending their lending, and also to try and address the perception that the market had that they were predatory lenders. So we actually developed a process whereby we have a closed user group for buy now, pay later, and they actually share data with us every day. On a daily basis, they tell us which of their customers are in arrears, and then the other buy now, pay laters get visibility of that when they do a credit inquiry. So that's at point of origination. And then we also have a secondary process where Monica could have been a client of buy now, pay later for 2 years. All of a sudden, her circumstances change because life happens, things change. And then at that point, we would send an alert to say, hey, Monica's actually in arrears with another buy now, pay later at the moment, and then they make a credit risk decision and adjust that. They might put her on stop credit or reduce the credit limit. And then when she corrects her arrears position with that buy now, pay later provider, we send another notice to say, hey, Monica's all good now, and then they can adjust at their end, however their business decides to do that. But I think that's really a good example of emerging tech coming in, disrupting the traditional lending ecosystem, but really enabling the two, traditional and the new ecosystem, to work together to add value to both sides, while remaining within that regulatory framework, which can be quite difficult. But I think we achieved that quite successfully.
Okay, perfect, very clear, thank you. So let's move for the last 10 minutes here on how we can scale in the future for us here. Giacomo, first question for you. I'm really interested actually how we can shift from data coverage to comprehensive profile and business understanding. So what do you think can we do actually to shift from this coverage first to holistic business profiling?
Yes, thank you, Frederick. So I think that there is a premise here to do is coverage is still our obsession in many countries, because of course you have a theoretical 100% coverage, but then as Asia Verify and Advanced AI pointed out, we're still relying on manual, man in the loop and a lot of manual control. So turnaround time, it's still not real time. So coverage is still important, especially in some countries of this part of the world. The next two axes that I think will be have to be considered, and some have already been mentioned, are depth and extensions. So we need to move from data points that are updated on a yearly basis. Financial statement is the basis of to determine what is the credit scoring for a SME, but it's updated on an annual basis. Shareholders are updated with a 3 months delay, and so on. So we cannot rely on outdated data points, and instead we need to move into the daily signals that us, SME, are giving to the world. And I'm thinking of open finance and open banking that today, strangely, haven't been mentioned yet. But I think are tremendous opportunity to capture this depth that you're missing. Of course, through transaction, you can predict risk on a daily basis, potentially. And that's also true for trade payment data that could be achieved through a better collaboration among us, but also putting together institutions, the consumer itself that has to, and the business consumer itself that has to give you the consent and agree on sharing their data. And then, as I said, there is depth and there is extension. Extension, we have to think, I think, broader, not staying in the usual credit kind of field. And Advanced AI mentioned a lot of the data that has to be considered. Utility, I think it's a great source of information. which also can help us to derive what ESG scoring, which is another extension beyond credit data. But this is what, and you ask me how, right? So going back to the how, I think that there's an initial step that we have to do is moving away from silos and moving away from the PDF data report, instead investing a lot on architecture, that architecture that it's scalable, flexible, and interconnected. We need to mix all the new data sources that we mentioned, all of us, and be able to make the matches and make speak each other. Otherwise, all these efforts are useless.
Thank you. Anit, looking at the future yourself, what's your opinion? What are the emerging risks that could actually appear in the future related to data analytics and the likes, and how do we manage them?
It's just SME. Well, I would say the amount of times AI was mentioned during the course of the last 2 days, I think there seems to be a lot of expectations on that. And I think that to me is a risk. There's still certain things are done in a very traditional way. The speed of getting things done, I mean, when you talk about a loan, right, it doesn't have to be real time. It's okay, I can wait 15 minutes, I can wait for an hour to get my loan, it's okay. As long as it's on the same day, it's okay. It's the reliability, and someone spoke about this morning, I guess, also, it has to be more reliable and risk-free, and that's more important than the speed, right? So having all that data is great. Being able to do AI and stuff and automation might bring in a little bit more efficiency, but at the same time, I think it will be some time before we actually start relying too much on it, at least for now. But it does help in some ways to bring those, the time down. But I think reliability is still, at least in the markets that we operate, people are willing to wait. The lenders are also not in a hurry. So yeah, I guess that's what it is.
Okay, Fikol, same question for you. What do you think are the emerging risks actually for the future?
Yeah, just to follow the edit, in some use case, the quality is much important than the speed, right? Especially for the SME, it's a lack of information. We can consider about using AI to get alternative data as much as possible, is relevant alternative data for the use cases to making better business decision. But in the same time, it is a joint effort, in my view. It's from both sides, right? So we cannot just require SME to follow exactly like a big companies out there to provide everything before you can using the services. So how we balance that, we want to give provide extreme user experience to the SMEs. In the same time, we cannot compromise compliance. So I think there's a joint effort together. I'm seeing the path we are getting there.
Okay, perfect. So some final thoughts, actually very generic, on the future of data accessibility. So I'd like actually to understand, any of you wants to step up actually, what you believe will be data accessibility, whether it's actually for consumers, for companies. I come from a region actually where we operate, where actually data is really a nightmare actually to collect. There is no transparency, no trust at all in Middle East and Africa. So forget it, but I'd like actually to hear anyone your thoughts, what's going to be the future of data accessibility? Jun, maybe?
Pretty hard question, but anyway, I'd like to provide some clue because, while we're exploring the new data world and new technology, the first time we try to have control our ecosystem. So by having one-to-one relationship with some data provider, we try to build up the one alternative score. And every time we build up the new score, pretty struggling because from the user side and demand side, they want to have a holistic full view, not a one-by-one view. So that's one of the reasons. Recently, we started called data dam business. So meaning that instead of a one-to-one relationship in the business alliance, we make the dam business alliance by using data. This means that in this case, water is data, and then we construct the dam to collect all the data together. But actually, previously for the collection of the credit data, we control and we are the owner. But now I think the credit bureau already transferred to kind of facilitator for the system and technology. And then we just have a harmony with the new ecosystem by having a new data dam. So meaning that the role of the information intermediary, either PCR or private credit bureau or information provider business, I think we need to prepare some role transfer because we think that we can control the data, we own the data, we make the business, but actually the data world is expanding so fast, and then we cannot control all the data source actually. But instead of controlling them and owning data, maybe we can try to facilitating, providing some infrastructure and then some technology with the harmony of the new data economy and the ecosystem. I think we need to prepare those kind of change because anyway, either change or instincts is very simple law of the natural, right? So I think that could be a clue for what you asked to me. Thank you.
Anyone else? Any final comment? No? Giacomo?
Maybe I'll do a quick one. Yeah. So I think that the future for accessibility, it's great. The AI system is going to amplify our channels because that's how I think that AI will evolve. We're going to be the data provider. So that gives us a lot of more exposure. The change is already happening. We are moving from the classic credit managers that buy our reports to other businesses like market intelligence, consulting. Yes, those kind of new targets. Capital market are also a good client of us. And I think that, yeah, the two main accelerators to increase the accessibility to this new untapped market are two. One is one we discussed during the session is extending the data sources, moving beyond the traditional data and extending to alternative data. And second, it's embed our information into AI tools that will help us to reach a much higher audience than today.
Can I add to that? So I think aside of the technology piece that is definitely an enabler and will help us access the data and collect more information easily, I think to echo what was talked about yesterday in the regulatory panel, there's a global move to give consumers the right to understand who's got their data, what purpose are they collecting it for, and who are they sharing that information with. And so it'll be interesting to see how that starts to impact our businesses more and more. And I mean, will that morph into business land where if you're not a publicly listed business, those same privacy components apply? I don't know. But there is some conflicting regulation going on, open data, trying to open up the world. On the other hand, we're trying to really close it down because there is a trust issue. So I think it's going to be an interesting space to watch.
Perfect. Anything from the audience? Any questions that anyone would like to raise to one of the panelists? Oh, all was clear enough? Okay, perfect. Thanks. Thanks everyone actually for bringing such clarity, such energy as well. I believe that the ambition is shared, is not actually to have data only for insights, but for impact. So let's continue working together. Thanks a lot.
Thank you.